I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. Hey, look, I'm just trying to make you a little money. My job, not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Maybe it was all a dream, or more pointedly, a nightmare. I'm talking about the Chinese artificial intelligence breakthrough known as DeepSeek. Remember that? Which caused Wall Street to turn its back on the AI data center cohort. Sell. Earlier this year, we were told that the Chinese had come up with a way to build AI models using far less hardware, meaning chips from NVIDIA, and it crushed every stock in the group.
The House of Pain.
With the biggest casualties being the stocks of all the companies needed to create high-speed computing and generative artificial intelligence. Today, the DeepSeek nightmare officially came to a close as data center tech led the way back up, driving the averages to near their all-time highs. Dow jumping 507 points, S&P climbing 1.1%, NASDAQ pole vaulting 1.43%.
House of pleasure.
Almost back to where it was before everything started getting kerflooey. This rally is a total refutation of everything you heard back in January when we accepted that China had beaten us in AI. It was almost a replay of the Sputnik affair, when the Soviets launched the first satellite to orbit the Earth on October 4th of 1957. Back then, we had an inferiority complex about the Soviet Union, like we have now about China. We decided we were finished. We'd never catch up to them in the space race. But not only did we catch them, we leapfrogged them, and we never looked back. When the DeepSeek news broke, Wall Street exhibited the same inferiority complex, and everything AI-related got hammered. Everyone just accepted that China come up with something revolutionary that made all of our artificial intelligence efforts pointless.
They know nothing!
Almost no one dug into DeepSeek's highly misleading numbers. But just like with the Russians in 1957, it was all chimerical. We never heard from the Chinese again, did we? Except that they were willing to go to the mat to get their hands on NVIDIA's second-rate semiconductors. Not even the best of. We were never going to give them that. It didn't work. Our governments came to some sort of agreement, but we didn't give them the chips they wanted, chips they wouldn't have been going begging for if DeepSeek Sputnik had been a real breakthrough. Why didn't any of the naysayers and pessimists put that two and two together? If they had, they would have stayed in these stocks as we did for my charitable trust. This data center renaissance, so shocking to the people who abandoned these stocks. The NVIDIAs, the AMDs, the Vertivs, the Microns, the Marvell Technologies are all back or nearly back. And the story that NVIDIA CEO Jensen Huang calls the new industrial revolution is once again front and center. It's like DeepSeek never happened. The AI stocks, they're all breaking out. Of course, success has many fathers, and this rally is about more than just the data center. Just a week ago, we were trembling about what would happen in the Middle East as we watched oil prices climb and climb. The decline in oil earlier this year had been our hope to offset the rising price of tariffed goods, but suddenly was going away because of the war between Israel and Iran. Stocks which had tried to climb back once again seemed ready to roll over. It felt like only oil stocks were worth. For all its prowess, Israel seemed unable to stop Iran's nuclear program on its own. But then this weekend, President Trump bombed Iran's 3 big nuclear enrichment sites, and suddenly Iran no longer had a viable path to become a nuclear power. Of course, Wall Street wasn't really worried about the Iranian nukes at all. It was worried about the price of crude. The usual pessimists assumed that Iran would shut down the Straits of Hormuz, blocking all 20% of the world's oil supply. But that would have represented a major escalation, and without a functional nuclear program, they just didn't have the cards. In fact, Iran's desperate for money, which means they need to keep the Straits open, not closed, to sell their own oil, 1.7 million barrels a day. Once the blockade thesis got taken off the table, oil plummeted from $78 and change at its highs yesterday to the mid-60s today. It's given up all of its gains since the mini-war began. And I think, by the way, that oil has got a lot more downside. With crude going in the right direction, we're back in the declining inflation story. It wasn't enough to get Fed Chief Jay Powell on board with rate cuts today. He just told Congress that he wants to wait and see. But there is enough slowness in the economy, particularly in housing and autos, that I think we'll definitely get rate cuts at some point this year, tariff or not. That's the other leg of this rally that's driving up so many stocks. But now I got to go back to this thing that I know you care about so much. This tech situation, this DeepSeek affair is one of the most instructive stories I've come across in years of trading. It's a microcosm of everything that causes people to get the market wrong, to lose money, to write off stocks in bizarre embrace of American mediocrity. In a market with the memory of a mayfly, it may be impossible to remember, but DeepSeek's ability to do so much more with less went almost unquestioned because it was China. And if DeepSeek's numbers were real, which I don't think they were, then all the hyperscalers, the Microsofts, the Googles, the Amazons, the Oracles, were wasting billions upon billions of dollars on unnecessary AI hardware. If you believe DeepSeek, it meant that virtually every tech executive was an idiot. Our tech titans, we were told, had lost their minds. All that build-out simply could not be justified. We had visions of tens of billions of dollars worth of write-downs, so you had to sell every one of these tech stocks. Every one! And that's exactly what happened. For months on end, I told you it was a mistake, and a handful of experts called out DeepSeek's numbers. But for the most part, nobody listened except CNBC Investing Club members, and we will convene tomorrow, noon, to talk about it. These AI companies became the punchline of endless jokes about overvaluation, with the biggest joke of all being NVIDIA. You couldn't go a day, make that an hour, without hearing about all the brilliant hedge funds that had sold NVIDIA, could you? The company, which had been leading a new industrial revolution, suddenly became a one-trick pony, a semiconductor maker that needed China to make its numbers. But it wasn't going to be allowed to sell them. So what do? You had to. Sell. Those of us who champion the data center in general, and NVIDIA specifically, look washed up, clinging to a thesis that had been defrocked by the Chinese. We tried to argue that perhaps the whole thing was highly misleading, but DeepSeek never actually disclosed their full costs, including their hardware costs. Yeah, they didn't even tell you what they spent on chips and servers. Yet somehow their numbers were treated as gospel, and anyone who questioned them, they were regarded as insane. Now, looking back, with so much of tech bordering on new highs, it's clear that these stocks never should have been sold in the first place, because DeepSeek simply wasn't that meaningful. With the data center story back on, all those analysts and hedge fund managers and newsletter writers who, have to try to get back into these stocks, the ones they dumped at much lower levels. They might be able to get back in if we have a tariff fiasco. Maybe they can have an earnings report or two, but I think they'll be left behind. The bottom line here, the DeepSeek affair made so many money managers believe that Mark Zuckerberg from Meta, Andy Jassy from Amazon, Larry Ellison from Oracle, Satya Nadella from Microsoft, Sundar Pichai from Alphabet were all a bunch of morons. Here's what I have to say. Who looks like morons now? Jerry in Missouri. Jerry.
Hey, Jim. Thanks for taking my call.
Of course, Jerry. Good to have you on the show. What's going on?
About 2 weeks ago, I listened to an interview with David Faber and a CEO named Chris Britt, and I liked what I heard about this IPO. Originally priced at 27, but it opened at 43. It's been dropping steadily ever since. Now it's close to its original price. What are your thoughts about Chime?
Okay, look, I think Chime was part of this. There was a couple of days where no matter what anybody did, things were going up. And then this one happened, and it cost too much, and people got nervous about it. $10 billion, Chime, I want to buy it. I think it's going to be good. I think every analyst is going to come out and recommend it. I think you get a good price here by the next level at 25. Let's go to Luke in Texas. Luke.
Hey, Cramer, Professor Cramer, Luke from Villanova wanted to ask about the defense sector. Should it take some gains from the tech sector and reposition Lockheed Martin? I like Lockheed Martin too much to tell you to do that. Every time I see Jim Takelet, I say to myself, why does anyone want to sell that stock with a 3% yield and a great book of business and a terrific CEO? No, you stay long, Lockheed Martin. All right, listen, this DeepSeek news made so many money managers believe that our leaders of our great tech companies were incompetent. Well, after this last rally, who's looking incompetent now? On Mad Money tonight, AV, the artist formerly known as Air Environment, reported its latest quarterly results from the bell. I'm sitting down with the CEO. See how this defense stock is standing up in the geopolitical tensions that we're still seeing around the globe. Then, does this AI-driven bull market have more room to run? I'm going off the charts to follow up on what I just told you about to see what stage of the cycle we're in and if this market has any parallels to previous bull runs. And MasterCard has seen its stock pull back due, of course, to the potential threat of stablecoins. But as a legitimate concern, I've got the company's CEO to set the record straight. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.